morning and welcome to the VSA Capital 5-Minute Morning Mine on Tuesday, the 25th of March. And Paul's away at some decarbonisation conference or something silly. But we've got Ollie. Ollie, how are you this morning?
Yeah, very well, thanks. How are you?
I'm all right. Look, you were in very bright and early this morning for you. Normally I have a lot of peace in the morning for anybody who comes in. You were in early, Ollie.
I was woken up by hay fever and got lucky with my tubes.
There you go. Anyway, right, this morning, there's itsy bitsy news, but I think there's some sort of big news and general sort of thematic stuff, which is what we always love talking about anyway, Ollie. So off you lead and I'll chip in.
There's not much RNS news in London, but in terms of gold, the M&A that's been starting to happen is picking up in the sort of mid and junior segment. Gold Road, which was a Tiddler early exploration stock 10 years ago, is now a multi-billion gold project in Australia, which is a 50-50 JV with Gold Fields. They rejected a $2.1 billion offer yesterday. The stock has now rallied through that offer price, so we could be looking at another attempt from Gold Fields being the 50% JV partner. And then we've also got today Montage Gold taking a 19.9% in African gold. Montage Gold had a phenomenal 2024 after they got about $170 million of investment from Zijin in February, and then the stock has just gone from strength to strength after they published their PFS on their large deposit in Côte d'Ivoire, which is where they're now making an investment into African gold. African gold, relatively early stage, and they've only so far defined about 500,000 ounces on their Didiavi project, but it is high grade, 5 million tons at 2.9 grams a ton. But Côte d'Ivoire, really active jurisdiction. Endeavour have invested in private Kulo Gold and Motor Engil or Luso Global Mining into Kobo Resources, all quite similar deposits. So quite a lot happening in the gold M&A sector at the moment.
M&A is a very interesting sort of situation. We discussed this obviously a bit last week, Ollie, with Central Asian Metals. You could argue, how does M&A work in the mining industry? Because you have a project in one country and another project. Where are the cost savings? Where is it complementary? But there's a huge amount of sense in a producing company acquiring an exploration company or a pre-production company in order to help build it and fund it. And there's also, of course, a huge amount of sense in building up your total reserves to make yourself of a size where you really matter, shall we say. So it actually is, I think, for the right sort of deal, pretty important M&A in this space. And of course, if we are going into this mega bull market that I think we are in commodities, you're going to see a lot more M&A, and getting that right is very important. Is that a fair summary?
Yeah, and this is what has been missing for the last 10 years, I guess, on the whole, is that junior companies where management does specialize in exploration and developing assets, not in constructing them, haven't had an exit route and been able to leverage that expertise that the larger operators have. And that's where I think it's gone wrong, as companies have tried to build projects on their own as independent juniors, which is much higher risk than letting a major take a 50% stake and lend their expertise. While looking at this Montage investment, they're taking a 20% stake, and as the exploration unfolds, they can grow with that. But as it stands, it's a nearly $1 billion Canadian company, and risking 6 million Canadian really doesn't change very much, but for potentially a far greater reward. So that disconnect that we've had is now starting to come back in together. And I think that model of earning in and de-risking the juniors still gives minority shareholders the chance to make money, and an exit route as well.
Yeah, and it helps you get over this sort of issue of the Lassonde curve, which is, where you end up in your sort of death valley. So yeah, look, I think it's what the market needs. You were showing your age a little bit there, Ollie. You said it's been in a drought for sort of 10 years. I think it's more like 17 years. 2008 was pretty much the end of the last bull run in commodities, or commodity equities anyway. Anyway, there we go. All right, there's enough for today, I think, and we'll be back tomorrow. Thanks.
This podcast has been produced and edited by VSA Capital. It is intended for information purposes and not as investment advice. The information is intended for recipients who understand the risks associated with equity investments in smaller companies. Please do your own research and do not rely on a single source when making an investment decision. VSA Capital may derive fees from this content and seeks to do business with the companies mentioned.